Good morning, guys. Welcome to my video. Today we're going to do some trades and we're going to do the wheel strategy. So the wheel strategy is my favorite strategy for trading options. Essentially, we're selling puts to get into a stock and then selling calls to sell that same stock either at the same price or a higher price than what we bought it at. So last week I had sold puts on Coinbase. This I have two accounts. This is my Robinhood account. I also have a Webull account. So on this Robinhood account, I sold two contracts for Coinbase. A put at 337, which expired on Friday. And I got to put the stock because the price did go below 330, 337. And currently now I have 200 shares of Coinbase. If you can see here, I have 200 shares of Coinbase. So that means now I can sell calls on this stock. So I'm going to pull up Coinbase here and do some options here. So just taking a look at the price. There is has been a significant increase in price over the weekend. And there's a lot of optimism right now that the government shutdown could be ending soon, and a lot of stocks are coming back up. So we're gonna sell a call on Coinbase. So we're gonna click on Trade Coin Options, and we're gonna sell a call, and we're gonna sell it expiring this Friday, November 14th, and we're gonna go up, and I bought this at 337, so I would like to go above that price, same or above that price. With the stock market, I've often seen that when there is a dip, often the rally is very, very fast. Sometimes even faster than the dip. So sometimes stock market can come back up very, very quickly, and therefore I want to give the stock room to run, and I want to maybe pick up some appreciation on that run. I think certainly there could be a big increase in the price of this stock this week. So I want to go a little bit higher than the price that I bought it at, which was 337. So I'm going to go for 350. I think Coinbase for me, 350 and below is a good price. So I'll be willing to sell this at 350. So as you can see, the premium right now is 1.72, 1.8 for per contract. And then because I have 200 stocks, I am going to sell two contracts. So let me continue here. And I'm going to do two contracts. Okay, so we're going to sell two contracts here. Take a look at the bid and ask. Right now it's 185 to 190. So or 183 to 191. So I'd like to go in the between, but I like to go on the higher end. So, it's gone down to 182. I was going to do 190. I think I'll put in 190. I think that as the stock moves up, likely this will be filled. And I'm going to sell two contracts. So that's my order for Coinbase. Okay. So that's my Coinbase order. As you can see, this is here. It's being processed. I also have some a call currently on Meta. So that's a 720 call. So that currently is at 633. I did get put the stock at 720. So therefore I sold the call for 720 as well. That's expiring at the end of this month, 11/28. So we'll just continue to hold that through expiration. And then now I'm going to jump onto my other Webull portfolio to do some more trades on that account. Hey guys, so I'm jumping over to my Webull account. So I just want to go through some of my positions right now. So I do have the Coinbase call here. So I did get put 100 of Coinbase on this account as well. And I sold a 340 call last week. So I was put Coinbase at 337.5. And so I bought it at that price. Obviously, Coinbase did pull back. And then I sold a call last week for 340. The reason I sold it last week was because there was an early exercising of my option. So sometimes when your option is deep in the money, so Coinbase had come down a lot below the price of 337 where I had sold my put, then sometimes people will exercise that option earlier before the expiration date, which happened to me, which is completely fine with me. So then I turned around and sold a call on those 100 stocks at 340. I was put at 337, expiring this Friday, 14th November. So that gave me a little bit of appreciation, but essentially very similar, a little bit higher than the price that I bought it. And both, obviously, both when I was selling the put and when I was selling the call, I collect premium both sides. Then also we're looking at my NVIDIA put. So 205 put is expiring at November 25th. That's a play on earnings. So I think NVIDIA is going to do very well in the long term. I think it's going to continually grow, and I think it's going to continue to grow. It's creating a lot of the AI chips for a lot of the AI, artificial intelligence currently. So I think that's going to do well in the future. And the next I have Palantir. So I have 400 Palantir stocks. I previously had a few weeks back had got put the stock. I then sold a call against the stock for earnings, which was last week. The call option expired on Friday, and it was deep in the money. There was a 185 call option, and Palantir had gone all the way up to 205. I think it was even 207. So I really thought that that was going to be exercised by the end of the week. If it's going to continue to be in the money, but obviously there was a big pullback in the market last week, and therefore Palantir came down, and therefore that contract actually expired worthless. So now this morning I'm able to sell some more call options on Palantir. So I'm gonna do that right now. I've got 400 stocks, so that means I can sell four call options, and it's come up a lot since Friday, and I think it's going to continue to go up. So what I'm going to do is I want to capture as much appreciation as possible. So I'm actually going to sell a call at 210. So that, I think that Palantir's run up a lot this morning. I think it may certainly continue to do that through this week. So therefore, I want to capture that appreciation of the stocks as well as collecting some premium. So I'm going to sell the 210 call option for this Friday, 14th November. And I'm going to sell at a total of 4 contracts since I have 400 stock. And I'm going to let's see what the bid ask is right now on this. The bid ask looks like it's around 61 cents to 58 cents. I'm going to go for 61. I think as Palantir comes back up, it's likely to go up. The price of the call options, actually, I'm going to do, 62. Let's do 62, actually. Okay, so I'm going to place this order right now. Sell the 210 call Palantir 4 contracts for this Friday at 62 cents, which is basically times 100 for each contract, so $62 per contract. So I'm going to sell that right now. And it looks like that was filled. So let's take a look, go back into my account. Okay, so that was filled. The 4 contracts, and it looks like it was filled actually at $65. So I can go more than I had actually put in. So that's even better. So I'm getting even a better price there. Entry, so $65 and 210 for this Friday, and times 4 for each contract, so each 100 stocks. And yeah, that's really my trading and my portfolio today. So I just wanted to show you how I'm running the wheel on these stocks. So stocks that I think are going to do well in the future. You can sell a put to get into the stock. If you don't get put to stock, you just keep the premium and you can sell a put again the following week. If you do get put to stock, you then turn around and sell a call for either the same price or higher. That way you're collecting premium from selling the options, and you're also, if you're selling at a higher price, you're also getting appreciation from that stock increasing in value as well. So hope you like this video. Hope you found this useful, and if you found some value in this video, please leave a like. Okay, and I'll see you in the next video. Thanks.